is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And it is a gorgeous and beautiful January 22nd. We've got a market that's moving very tinily. It's not even a word. I want to say just smallly, let me put it that way. Ahead of major earnings, we've got a bunch of stuff coming out in the next 2 days that will really start pushing this market. So we'll start looking at that. But it'll be interesting. Got a lot of news today. We're going to go right to the market. We're up 3 points on the S&P cash on 2.3 billion shares. So not a lot of conviction so far. We're looking at many stocks, and we're going to get to with earnings either tonight or tomorrow night. Probably the big one's going to be Apple tomorrow after the bell. We've got Google tonight after the bell. We've got some others. So we are going to be in business here very shortly. Earnings, of course, today, Cree, CSX, I think, is already out. Google tonight, KSU, NSC. Most of those are up on better. Verizon already out already. We're going to talk a little bit about them. And IBM also, I think, tonight. Apple tomorrow after the bell. So we'll take a look at that and those stocks today and try to get a preview. Basically, I guess my last prediction was Intel. I don't see any real clarity in these stocks for the ones at least I looked at. A lot of it depends on how the company decides to color their commentary on these stocks. So probably be tough, especially with the price of options. Putting in somewhere around a 6 or 7% move up or down to make money. It's going to be pretty hard to have any kind of bet unless you know you're right going in. But most of these stocks like Apple probably going to have to play on some form of option out there, and they've gotten a little wide out here. Google, rather interesting and rather wide. Let's see if I have that in my list here. No, I need to add that to my watch list here at the office. Take a quick look. 704 got down to 695 and started pushing a little bit. Of course, on Google, which we'll get into maybe a little later in the show. The biggest thing was the $500 million loss from Motorola that was unexpected last time. That's what caused that huge gap down. Filled most of it out there. What they're probably looking at is seeing how much Google could trim the major losses on that Motorola division. Their phones have not been selling well. The question is just how much dead wood could they cut out of there and cut down the losses. Haven't been really advertising it, so it's almost going to be all overhead and just how many people and how many programs out there that they can cut that are sucking money up into Google. But it may have a lot more to do this time since everybody's looking for that, probably with the prices that they're getting off of search. But anyway, we'll go through a lot of those. Of course, the rail carriers are a little higher. We'll get into that also today. Samsung's got a new LED light out. This is probably, I went and looked at it this weekend, probably the one that would be closest to actually replacing a light bulb. It's $30 at Lowe's, I think. Maybe Home Depot and Lowe's. I think it was Lowe's that I saw it at. The light output is fairly good. Still takes about a minute or two to get to full power. These are cold cathode kind of LEDs, and they don't have that kind of instant on. About 22,000 hours, or no, excuse me, 22 years of useful life is what Samsung is quoting on it. Just remember these LEDs start off at 100%, and over time we'll get down to probably about 60, 70% of the rated power before they fail. But if you could get 22 years out of it, and it was in a high roof where you don't like changing light bulbs, well, not bad. It's got a big heat sink on it to try to keep the heat down, which is the major failure of these lights. They work good in the cold, but out in a hot night out on the porch down here in Florida, that heat tends to knock that 22-year lifespan down considerably. But kind of interesting that we're finally getting maybe LED light bulbs that are fairly decent. And probably over 22 years, could you spend $30 in light bulbs? Yeah. These things should probably be down in the $10 range before they find mass adoption. But at least there's one that has good color and a little bit better coming along. Batmobile sold for $4.6 million. The only reason I brought this up is, one, I've seen the Batmobile, and if you've seen it or ever seen the real first Batmobile, you know one thing. And that is, if it wasn't a Batmobile, you wouldn't pay $10 for it because it looks like it'd been hit with a hockey stick and a golf club many times. It is not in very good condition. Looks good in pictures. In real life, it is beat up, and just the glass in it for the head, for the windshield is all kind of cracked and creviced. Looks kind of like a 1940s fighter, you know, with the original plexiglass in it. But they probably cleaned it up a little bit, got $4.6 million at the Barrett car auction. I was more interested in how the auction went to see what people are spending their money on. And it looks like a lot of people that took profits out of the market this year went and spent them on rare and exotic cars. The Spiders, the Daytona Spiders. If you saw the first year of, what is that, Miami Vice, he was driving a Daytona Spider, but the thing wouldn't run very well. They had three of them, and they couldn't get one of them to run hardly ever. Kind of the 1970s Ferrari Daytona Spider legend out there. They were horrible pieces of crap. But also, I think $6.5 million for one of them. So probably not a bad deal. They sold for 10 grand or something back then, or 15 grand. When a regular car was probably top of the line, U.S. car was 5 grand. So still 3 times more expensive, but or 4 times. Maybe they're 20 grand or something. But exotic cars, probably not a bad place to put some of your money, but not now. I think we're looking at that. Look like we're probably very close to the top of the market once again when we start seeing these huge numbers come out. But on a pullback, car's not a bad investment over time, especially this car. It was bought for $1. It was a 1955 spec car, and they needed a one in 15 days for the start of a series called Batman. Wasn't that 1967, 68, 1970, something around there? But they bought it for $1 from GM and spent 15 grand in the 60s on it to make it look like that. Just hasn't held up well over time. I've seen it a couple of times at car shows, but kind of interesting that we are seeing a market that is rather frothy, at least in the car market. If you missed it, also in the news today, the Israelis are headed to the polls. The reason, did I spell that right? No, it didn't show up as misspelled in my spell checker. Israel basically is having their vote today for their new prime minister, and you know, they've got. When you look at, I almost showed it, but they had a picture of the ballot and how many different parties these guys can choose from. Basically, they got 32 different parties, and talk about herding cats. You got to get enough people together to get a majority, and then stick together. And then, of course, it's almost like an episode of Survivor, or shifting alliances back and forth. But the reason I think this is going to be so important is if the current chief of Israel gets reelected, probably a good chance that Iran will probably not get the bomb. If he is not reelected, there's probably a good chance that they will get the bomb. And we're probably going to look at lots of instability over the foreseeable future as someone sworn to killing some 6.5, 8 million people in Israel. You know, he said it 1,500 times, and also is a complete nut in Iran. You just hope that he doesn't get it. But how that's going to happen is a little different. There is still rioting in the streets of Iran. Hopefully they get overthrown before they get the bomb. Bomber, a lot of news coming out. I opined a little bit about the current CEO firing anybody that looked like they could take over his job. There's a former senior executive who's come out and written a book all about the people at the company, and anybody that suggests something different or that does very good instantly gets another job that there's no way he could ever succeed on. So he can constantly tell these people and the other people that, well, he just didn't get it done. But I opine that both at Microsoft and at Apple, the idea of being a CEO is more important than making a profit. So they make sure and kill off anybody that looked like that they could take over the king spot. I basically believe that's what Ballmer did, and the replacement for Steve Jobs, what's his name, Cook. Both of these guys probably firing off better talent out there. Most of these guys have gone on to get much better jobs than the ones that they had at Microsoft. So maybe a blessing in disguise as long as you have this toad who won't get out of the way and let Microsoft make some money. The VIX closed at 14, The VIX closed, he said, at 1246 on Friday. This was below the 13 level, which was the low in 2007. What's more interesting is when the market wasn't even moving this morning, in fact, it was down, the VIX was up about, I think, 63 cents. Again, we've covered it on the show. Just remember, the VIX is the next 30 days, whether or not there are vacation days or not. So if there are now some more trading days because there's no vacation days, you'll look and keep an eye on that. But I think, isn't there one more vacation day in February? I'll have to look it up during the break. But just remember, if there is a vacation day, they basically, the 30 days, doesn't matter whether the market is open or not. And if you pull out some days for vacation, you'll see the VIX drop. And when as soon as it comes, that vacation day comes out, you'll see the VIX pop back up. In this case, it's worth about 62 cents. So but even at these levels, the options are incredibly cheap. Verizon came out 8.4% year-over-year increase in retail revenue. They managed to lose a bunch of money again. Probably the most interesting thing was the CEO talking about the end of subsidies for carriers. Basically, he's talking about Apple. He came out with that in his conference call, and I think it was just about when Apple was at 507. Apple instantly started to sell off, went down to about 496, and just under 497. But if anybody wants to see the retreat, that's it.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, we were talking about Verizon. It's up, 0.4% today. Was up much higher to a high of $43.41. But what do we have in Verizon? Probably the most interesting thing is, to me, is that subsidy. We had, I think Z from the Den called in some time ago. We talked about the differences. And, you know, I think Verizon's paying like $695 or $700 for an iPhone 5. Apple's paying about $285 to get it out the door. Pretty nice move out there. Without subsidies, that would probably get it down fairly significantly. Samsung is selling their top-line phones for about $485 to a lot of the vendors out there. So pretty easy $200 difference. And, of course, if they can push them to it, the carriers will. But the CEO from Verizon basically saying that he sees the end of that subsidy coming basically to an end. Also, the other thing that was interesting was his description of how many of the previous iPhones, the 4S and the 3s, are getting recycled and basically being set up and people not buying any phone at all. Just these companies that refab and rehab these phones, turn around, put new batteries in it, and resell them out there. How many of those are coming on the market, which they're happy because it didn't cost them a dime. So there was a couple of bright notes, but that basically was it. That maybe they'll have to quit fighting for the subsidies that they give Apple. Really not much in the way of subsidies that they're right now are giving companies like Samsung. There may be some small ones, but nothing compared to the size of almost 400, a little over $400 for Apple right now for iPhone 5. Is that for? Yeah, that's right. Phablets are coming. Samsung has shown at a trade show over the weekend a 8-inch phone, and just for technical terms, they're calling these things phablets. Big enough for a tablet, but really a phone. It's going to have 3G and Wi-Fi models, Android 4.2 Jelly Bean, 1280 by 800 display, 5 megapixel camera. But I see these ads on sometimes late at night, which is about 10 o'clock for me. I go to bed fairly early, but there are always these giant phones with giant numbers on them because, of course, people like me always need these things because I'm about half blind from looking at computer screens all my life. But, that kind of almost interests me. If I can look at this thing without glasses on, I'd probably buy the thing, even though it's the size of a small truck. But apparently, I talked to a girlfriend and some other people in the real estate business, and they said, to them, they don't want to pay a separate contract. They don't want to pay an extra dime. But at the same time, they want to be able to have something that operates and shows pictures like a tablet, and that they can use at their phone, or just use a Bluetooth-enabled headset and not worry about it. Probably not a bad deal, but I don't know. Somehow it's a little retro to get bigger out there. Let's see, what else do we have? Nu Skin is the kind of after this morning got to a low of 43.59. There's a lot of people pushing this because they're in it, but it's yet another one of these Herbalife stocks that a lot of the shorts are going after now, multi-level marketing. Now that the SEC is involved in defining truly what is a pyramid scheme and what is not, the question is whether or not these companies will go the way of the dodo if they are found to be pyramid-like by the SEC. But Nu Skin is another one of those. Symbol is in U.S. If you look at a chart at this thing, I'll try to bring it up here. If you could put it over the same thing as Herbalife, you'll see when Herbalife got hit, Nu Skin, pretty much the same thing, got slammed fairly quickly right after it. But there it is. You'll see it was that April time frame where this thing got smeared. It's held up maybe a little bit better than Herbalife out here, but just the mention of it again today was enough to get it. But just know that there's an effective short position on Nu Skin out here by some of the big guys in the street. Last week we talked about MLPs, which are limited partnership IPOs. All of those traded down. We'll get into that a little bit when we get back. But these limited partnerships are all things like oil leases and stuff like that. They did well last year, but it doesn't look good for MLPs this year. We'll be back in just a minute. Give me a call, 877-927-6648. That's 877-927-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we've got some IPOs coming this week. Again, you can call me at 877-927-6648 and see if there's anything going on in the marketplace during the break. But I don't think that there was a lot of movement out here. I'm tracking several stocks that look like they've had blow-off tops. We'll be finding that out probably by the end of the day. But I think that there's some big money to be made here on just a natural pullback from some blow-off tops on some highly inflated stocks out here. A lot of these things have been hanging out at the top, so I'm not counting Google or IBM in these. But there's a lot of other ones that have a lot of froth in them that make me remember the top in MCP and some of the other ones over the last couple of years. But we'll see how that comes out. I actually shorted them this morning in the newsletter, in the daily newsletter, let me put it that way. Bright Horizons comes out maybe this week. My sister used to work for them. Bright Horizons Family Solutions, basically daycare for kids. BFAM is going to be the symbol for them. 202 million. I'm going to offer 10 million shares at a price range of 19 to 21 bucks. LipoScience, which is a biopharma stock, provides diagnostic tests to assess cardiovascular disease risk. Plans to raise 70 million, so not much out there. I had some questions about how I predicted the $500 close on Friday, and if you're watching on Tiger TV, you'll see it. Even though the options might point a little higher, there's rarely a chance for a stock that has a huge open interest at a particular strike, like 500 or 550 or something like that on Apple. And if you notice that the options at 500 on both the puts and calls, if you added them together, well over 13,000 more than all the puts at $5 down and $5 up on it. Of course, the thing to do is try to make sure that the most amount of people lose. And in this case, when you can only push a stock so far, it is most interesting to push it to exactly where the most amount of people you can get to are, and at least closely. But next time you see a big stock like that has huge open interest in its options, and you want to know why it expires at a certain price point, I basically thought it had maybe an 80% chance of closing 50 cents up or 50 cents down, something like that. That it expired right to the penny is probably an arrow through the heart of many 500 put and call owners out there. But pretty easy to see when all the open interest is at a certain strike price that there is a tendency for those market makers to think how much extra money they could get by just holding the stock to a price for the end of the day. So there's a little bit more than just looking at the wins and losses out there in the curves of options. Always have to look at ones when you have like this on Apple. Also on Google, a lot of times you're going to find these stocks pinned to expiration, like Apple got pinned on Friday. Natural gas was up this morning. Let me find what we have here. Where's it at? Got to find it out here. It's off about 6, at least UNG's off about 6 cents. But if you're going to be trading natural gas, one of the things it was that we need somewhere around 4 weeks in a row of constant drawdown to really get natural gas going. And by the end of March, that's probably over. It's going to be tough. You got about 2 months to really get this thing going. They're continually producing more natural gas than they have storage space for it. So as soon as the cold weather starts to fall off, watch once again for falling natural gas prices. But right now, you've got about 8 weeks. If we got 2-3 more weeks of really cold weather, maybe that would be enough to take the froth off of just having nowhere to store these and see a little bit stronger. But right now, natural gas pretty much trading with the Weather Channel. So probably not a bad deal to be watching out there. Anyway, that's pretty much the news for today. I'm going to try to get into some stocks here fairly quickly and see where they're going, just to see if there's anything in Google. But we looked at it a little bit earlier. Part of a asymmetrical triangle, that is basically lower highs and higher lows out here. You've got this thing really in no man's land. It stopped pretty much right where you thought it would, which is that heavy volume down day that we talked about before on 10/18. This thing came down with 12.5 million shares. Almost basically filled that entire down day. Got to 745 on January 10th. Been pulling down to the low today, which is 695. You got a little doji that intimates that you are either looking at the halfway down mark on this stock, or this thing probably trading back up to 745. On good news, this thing's probably going to trade to 745. On down news, probably looking at probably in the 660 range if we see another really horrible week or basically the Motorola earnings. Also, if we see continued erosion over their searches, they were getting somewhere around 25 cents for a mobile search, 45 cents for a search on a desktop system. And what happens, just because you can't show as many, you don't get as much money back. And seeing if more and more searches are on mobile, the more likely that they're going to get less and less money out of it. So those are the two questions tonight, but we'll probably see it in earnings and the initial reaction, because that's what the two things that everybody's probably looking for right now. I suspect that they probably trimmed the losses somewhat on Motorola now that everybody's reacted to it, but probably weren't able to get it all. The options are saying that this thing should be within 6% of today's price, up or down into earnings. So, probably not a lot of chance to make money if those options are actually telling us exactly what Google's going to do. But right now, the people that are best at picking the point spread have it rather narrow on most of these stocks reporting. But I think it's like 4% on IBM and 6% on Google and 7% on Apple last I looked today. So most of these things are not predicting in something like a 15% move, but probably a move that will continue. I suspect Apple is going to have to come out and start talking about some of the problems that they're going to have, and maybe completing that ABC down that would take it into the high 390s, which would not be out of the realm of possibility. But a lot of it is not what truly is happening, but what they say it's happening, and a lot of times they try to put a very good face on it. Normally, if they put a good face on something that's wrong, the analysts will get to it. We'll start seeing weakness in the next few days in these stocks. I don't really play $700 stocks too much, but rather interesting out here. But I think we've taken a little of the froth off on Google and Apple. So those 6% ranges or 5% ranges, the options are telling us are probably correct. Anyway, what else do we have out here? Oh, boy. Let's see what else we have moving out here. Wanted to look at the XLF first. We've been talking about that for a while. It's been going up against these highs, and it's gone over it today. And we were looking to see what the volume was going to be like. Let me look at time and sales here real quick. But we are going over it. Let's see if I can get actually the volume. Just make sure it's right. I think it's wrong here. Sometimes these ETFs don't report correctly. Okay, 31 million shares. Let's remove that. Go back to this. Well, you're going to be very, very light. You had basically 120 million shares on the February 18th high that we're challenging right now in the XLF at in 2011. And as we continue to go up, a couple things I don't like in the XLF was that we didn't have a lot of volume come in to the gap up on the 2nd of the month when all these markets were taking off. And since then, there really hasn't been anything to come up with that 130 million share mark to show the kind of strength that we had on the last big major blowout on February 18th of 2011. So, what are we coming up to here? 2 years challenging that high. The energy has not been all that bad, but it has been lighter up to it. We're probably going to need something more critical in a way of a change out here. Let's see what else we have. IWM, another one of these slowly breaking out. Of course, we're looking at several highs back in this range. Depends on which ones you want to be the most. But even on the most conservative one, which would be the volume of May 2nd in 2011, $86.81. You had 48 million shares. Really not. We had like 23 million on Friday, 34 million 20 million last week. We're really hitting a lot of these ETFs on much lighter volumes back on these multi-year highs. The IWM is the Russell 2000 Index Fund, so we continue to watch that. Some of the other ones that had me kind of wondering quite haven't hit their highs yet, but there's extremely light volume out here, and that is the Harley-Davidson HOG. And I've been hoping this thing would get up to $54.32 and test the May 1st, 2012 high out here. This one has been slowly moving up. Seen a lot of these leisure stocks looking like they topped out. That one is the next one I'm watching for. Energy is another one that looks like it's kind of probably waiting for the election in Israel and maybe a little bit more blow off. We've seen a very light push to the upside in oil over the last few days, mostly probably for the Algerian problem. That seems to be pretty much over. What I don't like is some of these stocks that I'm seeing with very light volume at their highs. When I look at the stocks like Diamond Offshore Drilling, DO, what we see is we get into the $72 range with 2.8 million shares on March 16th. We get to September 18th, 2.3 million shares, and the last few days, very light volume in the under a million shares. What was that? Probably going to have that yet again today. Got a question from one of our callers, and it is Janet. How you doing today, Janet?
Good, David. How are you?
Fantastic. What are we looking at today?
Actually, I'm looking at Priceline. I've been watching this for a while, and it seems to have filled the gap, and I'm not sure if it's actually a candidate for a short right now, or, I have to wait a little bit for this.
Well, I'm wondering if you don't short this right after the Super Bowl. A lot of these stocks that have big ads, and there's going to be one for Priceline, bring a lot of the less educated traders out in it. One of the things I dislike about shorting this one is it did test the major low down here at August 9th low of last year. It came in, 400,000 shares shorter. So it did get a what I think is a valid test out of the low. You can say that it didn't get down to the last 50 cents, but it's probably pretty good out there. I would like to see something with a higher volume low out there. I don't know if you're looking for that December 27th low out here at 597. Is that where you're thinking?
Yeah, that's what I was looking at, yeah.
Yeah, so you've got one in there, and it's kind of in this trading range, not a bad one. Were you thinking about going with options?
No, actually, I was just looking at the stock in itself, just taking a very, very small position in it. Actually, at one point I was successful at 666, and I wrote it down a little bit. But
mark of the devil. Okay, so when we look at it, it came into that gap. It has filled that gap with when it came down with monstrous volume on 8.8 with, what is that, right? Almost just shy of 7 million shares. So you're getting into this in a very light volume out here. I'm wondering if this isn't like Buffalo Wild Wings, some of these other stocks that do well into the Super Bowl with high visibility ads. I know that the girl from Big Bang Theory is going to be taking over William Shatner's kind of position for Priceline. In fact, I saw the first ad yesterday with her in it. Okay. So the problem, I think, is until this thing has some major defect in it and everybody knows it's broken, there's a lot of people that keep climbing into this like Apple did. And, can you say that it's there? Yeah, I think I would probably think that you need at least some minor weakness in the market that we don't have yet. There's some stocks that are breaking already, I think, before the top of the market. But I see what you're looking at. I see the light volume. I see the doji. If I'd say you got something here.
Okay, thanks, David.
You bet.
Bye-bye now.
Bye.
Are
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And it looks like I've got a lot of people out here that have been following the patterns I've been talking about here for the last few weeks. We've got Max from Houston on the line. How you doing today, Max?
Yeah. Pretty good, David. I was going to call you to ask you about McDonald's. It looks like it's finished doing an ABC up, so I was thinking asking what your opinion was. I was thinking about buying some put options, a little bit below what it is right now.
Yeah,
for the next 2 months.
Yeah, you had that huge volume day down when it disappointed on almost 20 million shares on the 19th of October. It's come up and pretty much completely filled that today. You didn't have a lot of juice on it. Are you watching on Tiger TV?
I was, but I have to step away from my desk for this.
That's fine. You can catch it on the repeat on Channel 14. Okay. What I do like is, like you said, this ABC came in. It did exactly what it was supposed to. Energy really pulled back. It finished this ABC, but if you look at my Power Law Vector indicator, this last leg up was kind of gasping from the $86.81 high to the January till today, right? So you've got some decent volume out here. Nothing approaching that 20 million share down day, but it's not uncommon to see these stocks filling these gaps like this and then rolling over slightly. One of the things that caught my eye is not only this, but some of the other agriculture stocks, like the Market Vectors MOO, that we're seeing up here on very light volume, and we're also seeing on corn. Now, this is a kind of more of a retail stock, at least McDonald's is, but I would have liked to seen more demand in things like this corn this last leg up. Maybe we'll get more in the summer, but I would think that a lot of this kind of stuff would start putting a lot of strain on McDonald's, but you've had at least some kind of push on the corn stocks, which I don't know if they're feeding those beef cows that we eat at McDonald's with corn, but the feed is probably tracking somewhat with it. But when we go back and look at McDonald's real quick, where's my MCD there? There it is. Okay.
And the follow-on question is a month or 2 months good enough for like options, do you think?
They're so cheap. They're so cheap now. I can't see not buying 2 months. It'd be different if the VIX was at 30. But, I mean, you got a VIX in here in the $13 price range. It's almost always going to be cheaper. Do you know what the implied volatility number is on this?
No, I don't.
That would I'd be checking, but I'm not going to have time today to get to that.
I understand.
But if that implied volatility is down around or less than 30, you certainly want to be looking at options out here. Let me see. Let me take a look at those real quick. But get this right here. Okay, and we've got options. And let's look at April's just to be good. So you got $93 out here. Look at March's real quick. Well, I tell you what, they're not that expensive. Well, that's enough call. What were you thinking? What strike price? 90s?
Probably 90s, yeah.
I mean, this thing, they're trading around under $1.
Yeah, I know. That's why I was looking at them a few minutes ago, right before I called. So I figure it looks like it would be a pretty good.
The Marches look good. I don't know if we have time for me to go out here and look at the Junes, but if you get a nice trend in this thing, this could be awful good. When you look at the Junes in the 90s, they're like 240.
Yeah.
I mean, they're pretty sweet right now. It's if you're thinking about shorting, I really would be looking at these options. I like the setup. You guys are finding some good ones out there today.
All right. Thank you.
You have a great day, Max.
You too. Thank you. Bye-bye.